Interest rates are rising, which means the economy will slow down. So how can we protect our financial investments during this downtime? Derek Fossier with local firm Equitas Capital is here today to share tips on how to safeguard and maximize your money in times of high inflation, this rising interest rate. So how does raising the interest rate fight inflation?
Good question. Right now, the economy is very hot, overheating almost.
Yeah.
So the Federal Reserve is increasing interest rates. They're trying to bring spending down a little bit. And with spending coming down, demand's going to come down a little bit. And hopefully so will prices and inflation to help you out at the gas pump, the grocery store, wherever you're spending money.
Yeah, because the gas pump is killing me.
It is. A lot of people.
And yesterday, the big news, of course, Target's 52% drop in profit. So with everything going on right now, people are spending less money. That affects all businesses, and that affects the stock market. So how do you kind of like even it all out?
Right.
Because it seems like just a vicious cycle.
Earnings season was a bit of a mix, but it looks like some of the moves that they're making are starting to have its effect. Part of the reason why Target lost money is that it was more expensive for them to get the goods to sell to you.
Sure.
So hopefully these actions will help balance that economy.
I mean, do you foresee them just raising prices on everything, though? Because, yeah, they have to make that bottom dollar as well.
It's a struggle right now between people wanting to spend all of the money that they've saved up over the past 2 years and interest rates hoping to cool that off a little bit. So hopefully we end up in a place where supply can meet demand and things cool off a little bit.
What should people do financially right now?
Well, the first thing to do is not to panic.
Okay.
You want to try and talk to your advisor who knows your situation and can help you make a plan and stick to it.
And a lot of times, you know, we'll have these and people will come out and they'll say, just cut out some of the luxuries like Starbucks. But that's not our average viewer. We have some people who can't afford to buy the gas to get to work and put food on the table. So what are some of the things normal people can do at this time?
If you're looking at real estate, if you're looking to buy a house and you're worried about rising interest rates, one thing that you can do is lock in that rate as soon as possible. For the average mortgage out there, a 1% increase in rates comes out to an extra $3,500 a year. So locking in that interest rate can be a savings.
What about the real estate? Do you advise people to go ahead and buy a house now? Because I have heard a lot of people, but these are probably people in real estate. Well, you know, it's not going to get any better, so go ahead. What do you think? If somebody's on the fence, or if maybe they could wait a couple months, would you tell them to wait? I know you just talked about locking in the interest rate, but our interest rates aren't that great right now.
They aren't. They're still lower if you look at a longer time period, and really the more money you're going to pay with a higher interest rates, it's worth locking in that interest rate before it goes up even more.
Okay. What about when people are looking at retirement funds? I know a lot of financial guys right now say, just don't even look. Everybody says kind of like hang tight, it's going to swing back. But for people like me who don't know a ton about the market and how everything works, can you tell me, in a roundabout, do you have any idea how long it's going to take to swing back? Are we looking at years? Are we looking at months? What do you predict?
I think anything can happen, really, and you want to make sure that your portfolio is protected with whatever happens, and there's many ways to do that. You can look at companies with strong balance sheets. You could look at companies that have a leading market share, that when these costs increase on them, they have a better chance of being able to push that onto their consumers. Fixed income has a spot in many portfolios, and right now, as we're in a rising rate environment, you want to stay in the shorter end of that curve, shorter dated bonds.
When people come to you for financial advice, what's the number one question they ask?
The number one question they ask is where they should be, and that's the work that we do. You know, we look at their risk tolerance and what they have, what their goals are, and we put together a well-balanced portfolio that can survive in any environment.
All right, sounds great. Thank you very much.
Thank you.
And the Dow did drop over 1,000 points yesterday for its biggest decline in nearly 2 years. The stock market opens at 8:30, and when it does, we'll bring you a look at where it stands.